Hi guys, thank you for joining this webinar, Common Misconceptions about AI for Financial Institutions. I'm Janaha Vivek, I'm the Marketing Manager and the host for today's webinar. So moving ahead, webinar housekeeping rules. Make sure your audio is connected properly and you can hear us without any interruption. The webinar length will be approximately 1 hour. All participants' lines will be muted. So in case you have any questions during the presentation, please type in the chat box. We will address your questions and answer them during the Q&A, which is planned in the last 10 minutes. And we have planned some polls in which you can participate and make this webinar a little interactive. Choose your option and click submit. So moving ahead, what we want to discuss, to put it very simple, AI is a buzzword today, and with a lot of buzz around AI comes huge expectation versus reality mismatch. Thus, misconceptions on what AI can actually deliver. So, I will start with the speaker introduction, followed by emerging technologies and financial institutions, and the types of financial institutions, artificial intelligence use cases, getting to understand the real artificial intelligence. Can you identify? So here we have planned the polls. So please do participate here. More thoughts on AI and data, the foundation of AI. So moving ahead, we have Vasudevan Swaminathan, who is the president and chief consultant of Zuci Systems, who's with us. Vasu, we are good to go. Please start your presentation. Thank you.
Hey, thank you, Janaha. I would like to take a moment to thank the guest speakers who are already there in this presentation. Mary Jackson, the CEO of Online Lenders Alliance, and Michael Day, the Policy Director. They will be also contributing their thoughts towards the latter part of this presentation. But with that being said, let me get started. Before we get into the concept of the misconceptions towards artificial intelligence, let's talk about a little bit of some of the recent stories that we have had with respect to artificial intelligence and why the misconception happens or has happened over a period of time and continues to happen. Microsoft introduced Tay, which is a chatterbot, in the year 2016. Within 16 hours of launching Tay, they pulled it back because based on the interactions that Tay got from the Twitterati, it was giving inappropriate comments and sort of inflammatory comments actually. So Microsoft actually pulled it back. And then in the same year, which is in 2016 December, Microsoft introduced Zoe, which was another chatbot. And Joe was in action for some time before they pulled it back this year in April, actually. Again, the kind of interactions that Zoe and Tay made were not very conducive for users who are trying to talk to it, who are trying to interact and get answers and everything. So that's what happened in 2016. And interestingly, Gary Kasparov, one of the world champions of chess, had already fought with an artificial intelligence mission, the Deep Blue, back in '97. And he made a very interesting, he in fact wrote a book called Deep Thinking, where mission intelligence ends and human creativity begins. And in that, he made a very interesting comment, actually. He said, you can have 10,000 training examples, but, that doesn't mean that artificial intelligence can happen with that. But when you go from 10,000 to 10 billion, it all starts to work. Data is very critical for artificial intelligence to succeed. And what he said actually was happening a couple of years later, which is early this year and a significant part of last year. So Bank of America introduced their chatbot called Erica, which came with a lot of popularity. And with 25 million Bank of America mobile users, Erica was adopted by about 1 million people. But what was very interesting to note is Michelle Moore, the chief of digital at Bank of America, said, people have not really people do not really understand how a chatbot works. So they were using slang words like dough instead of cash. And she was saying that not a lot of people were embracing the chatbot and attempts were being made to adapt the product actually. This is in 2018-19, guys. And then Emmett Higdon, one of the reviewers from Javelin Strategy, also said the same about it. So she said, Erica is all about, there is a lot of data that is required in order to feed a simple chatbot like Erica, and to make it more proactive is going to be even tougher. So predominantly, I mean, if you look at it, there is a lot of misconception when it comes to building these technologies, basically. So you talk about a chatbot or you talk about any kind of emerging technology-based system, the time it takes to build that system is quite long, actually. And there is a lot of groundwork that you need to do in order to make it more productive. So we start off this webinar from that point of view, where we want to look at artificial intelligence in terms of where it stands as an emerging technology, and then go from there to how it is applicable to financial institutions today. So with these stories being said, let us look at a little bit of where the emerging technology cycle looks today from Gartner and names like that. Can you move on to the next slide? Yeah, thank you. So if you look at the attention cycle, people call this as hype cycle, but many of them prefer to use the word attention. So if you look at the attention cycle for emerging technologies, which was published about a week back from Gartner, it is very interesting note. It is very, very interesting to note that they have changed quite a bit from their cycle that they published for 2018. They had a lot of artificial intelligence content and machine learning and technologies like that. And they said that within 2 to 5 years, some of these technologies will reach the maturity stage. Now, what that means is typically, as far as the hype cycle for anything goes, there is a phased process to it. There is a technology trigger that happens, which is called as the innovation trigger. And then there is a phase called as the peak of inflated expectations, where there is a lot of media publicity, there is a lot of talking that happens around that, and people say this is the next thing to happen and stuff like that. And then people try a lot of things, people try and do a lot of use cases, but it doesn't give back enough returns as they thought it would, which is called as the throw of disillusionment phase. And then there is a gradual maturity, which is the slope of enlightenment, where there are some use cases that kind of become successful. And then finally, the technology reaches the maturity stage, which is called as the plateau of productivity. A very good example for this could be cloud technologies. Back in 2008-9, people started talking about cloud. They said cloud computing, a lot of grid computing and things like that. But it took time for cloud to mature, as we all can see. Right now, the way cloud has matured is very different from how it was spoken back in 2009, 10, and things like that. So that's the same here. So coming back to this particular emerging technologies for 2019 published by Gartner, it is very interesting to see that they have published very little artificial intelligence content. For example, you see something called explainable artificial intelligence, and then you see something called edge artificial intelligence, and then artificial intelligence in terms of platform as a service. But apart from that, if you look at it, they have not really spoken about it much. There is some adaptive machine learning somewhere, and a few things about generative adversarial networks and things like that. But broadly, they have not really shown, or they have not really captured how AI is going to mature. As a matter of fact, if you look at it, everything stands in the throw of disillusionment right now. And we don't really know when it's going to get to a maturity stage. But if you go back and visit the emerging technologies for 2018, it will be very, very different from what Gartner has shown in 2019. They did mention in 2018 that there is going to be at least a 2 to 5 year cycle by which there will be significant level of artificial technology or artificial intelligence being taken over, which is not something we see in 2019. The reason why we want to look at this emerging technology is because we want to map this to the financial institution scenario. I mean, not everything is applicable, but the CIO Global Banking Summit did produce something like this in terms of what emerging technologies looks like that for financial institutions. So the reason why we wanted to share this is to show you where we stand. Now, before we look at the emerging technologies for financial institutions, let's look at financial institutions and how they get bucketed today broadly. Today, we have lending institutions, credit unions, and banks, which are the traditional businesses very much focused into standard savings checking account and regular transaction-based financial things and all that actually. So as part of that, we have peer-to-peer lending, next-generation lending companies coming in like Underwrite.ai, Prosper, Cabbage, and others. And then we have the old-time credit unions, which are still there. And then there are mortgage institutions, a lot of them, which are again more like lending companies, but do operate at a different level. And then there are traditional banks, whether it is a regional, national, or any kind of bank, international bank, they again fall into that category. Then over the last 3 to 5 years time, if you look at it, we have a lot of companies that have been categorized as FinTech institutions, where we see a lot of things happening around payment applications, payment processing services, blockchain, Bitcoin, cryptocurrency trading, and things like that, which has happened over the last 3 to 5 years time. In fact, we do see a lot of banks actually acquiring fintech institutions recently because they want to strengthen their armor by getting into cryptocurrency trading and things like that. And the third category, we have non-banking financial institutions, where we have cash or merchant advances company and any other non-banking institution like a microfinance institution, investment management, capital market, mutual funds, and others. Now, all of these institutions in some form use emerging technologies, and everyone claims to use it in a different form. For example, chatbots seem to be a common emerging technology that most of these companies claim to be using or claim to be building. But broadly, all of these companies or all of these institutions within the financial sector continue to use emerging technologies. So with that being said, if you look at the Global CEO Banking Summit for Emerging Technologies to Financial Institutions, you can similarly look at the way Gartner has given their emerging technology, representation. So if you look at it here, at some point there was a technology trigger that happens, which includes artificial intelligence, chatbots, quantum computing, biometrics, cognitive computing, and everything. And there was a peak of inflated expectations phase where again you see artificial intelligence, robo advisory services, cryptocurrency, all of them going up. And then there was a trough of disillusionment phase where again these technologies continue to be like, well, there are a lot of things, but we don't know what to do with it. How do we actually make this an action? How do we actually make this work, and things like that? Now, this is the phase where you had names like Tay, Zoe, Erica right now coming up and things like that. So the phase right now still continues to be in disillusionment, and we expect the slope of enlightenment and maturity to happen. But very interestingly, when you look at this, what catches our eye here is the chatbots, blockchain, the behavioral analytics, the APIs, mobility were actually expected to go to the slope of enlightenment. And eventually, when you look at the plateau of productivity, we don't see artificial intelligence there. We still see core banking platforms, mobility, APIs, and things like that, predictive analytics, machine learning, and all of that. But per se, the word AI is not shown within the maturity phase, though machine learning as a subset of artificial intelligence gets into that phase. Also, what would be very interesting to see here is there is a certain level of maturity that is already happening within some of these technologies. For example, application programming interface, yes, there is a certain level of maturity that is happening, though it is not part of artificial intelligence. Similarly, there have been some level of improvements. In fact, to a large level, there have been improvements with respect to the core banking platforms, mobile payments, microservices, cloud computing, and things like that. None of these are actually, if you look at it, artificial intelligence based technologies, but as part of digital transformation efforts, as part of social analytics efforts, we see that some of these platforms have actually got to maturity, which is the core banking, mobile payments, the ATMs, cloud computing, predictive analytics, and things like that. Predictive analytics, again, is partially to do with artificial intelligence, but let's talk about it as we move forward. But what we need to understand is machine learning is the only thing that has got into the maturity phase for financial institutions in terms of emerging technologies. So let's focus. We are going to talk about that a little more in detail shortly in terms of how it is being used and things like that. But the past few slides that we have tried to show is more in terms of what kind of emerging technologies are being expected to make a difference to the future, and how are they actually making an impact in financial institutions and where they stand today. So with that being said, I'll move on to the next slide. We spoke about artificial intelligence in general. We looked at what kind of emerging technologies within artificial intelligence is making a wave and things like that. But it is extremely important to understand what artificial intelligence really means, or what kind of artificial intelligence use cases are we talking about within the realm of financial services, and what level of maturity do they have. Now, this is a very important slide to understand, because there is a lot of contamination or pollution that happens within the phrase artificial intelligence. So we want to make sure that we discuss these use cases and delineate very clearly what artificial intelligence means as opposed to all the technologies that are being put under the same name. So if you look at the use cases within financial services, I'm sure you will appreciate the fact that the ones mostly in use are payments, banking, again, capital markets, investment management, and insurance. Having said that, payments and banking are part of the core financial services, while capital markets, investment management, insurance are more in terms of non-banking financial services. But what would be extremely important to understand is there are three ways, or there are three phases, or there are three parts to these use cases within the financial services segment. One, these use cases are either used in the front office, or they are part of the middle office operations, or they are used as part of back office operations. And we are trying to look at the maturity at which they are progressing. What kind of use cases hold more maturity, and what kind of use cases today are less mature? And then let's try to understand whether they are actually artificial intelligence or something else actually. Now, if you look at front office, chatbots seem to be the technology of the day, or the technology of the hour, you call it. Today, there are robotics classes done for school kids. Everybody wants to build a bot. There are bots. There are websites that are available to build bots. So building a bot is like become a kid's play today. So within the scope of any industry, whether it is retail or banking or manufacturing, building a bot, having a bot on your website, answering any kind of question, taking interactive questions, getting answers is something you will see everywhere. Everybody has a bot today, particularly let it be a mobile app or a web-based app actually. So chatbots, there seems to be a certain level of maturity, as you can see from the the color indication. So the ones that are mentioned in dark blue seem to be more mature, while on the other side, use of technologies in areas like natural language query processing in a technology like voice assistant is not matured yet. In fact, NLQA, or natural language query processing, NLQP as you call it, is an area that continues to evolve, especially with Siri and Alexa and other technologies. But there is a general impression or perception that it has really not got to where it should be. So voice assistants have still not got there yet. Similarly, authentication and biometrics, there is some level of improvement that is happening in some places. Like for example, the US immigration system today, the USCIS could be doing extensive level of authentication and biometrics, but that may not be true to a lot of other companies that are trying to do. So that's the case with front office. And when you look at the middle office operations, there is some level of maturity that is happening with know your customer, anti-money laundering activities from a financial institution standpoint. Similarly, on anti-fraud and risk compliance, basically, but that may not be applicable to all the operations within the middle office, as you can see here. And when you look at back office, there is a lot of talk in terms of doing automated underwriting decisioning, which we all see with a flurry of new companies like Cabbage, Underwrite.ai, Prosper, and names like that, which is an area where people claim to use artificial intelligence significantly in order to make decisions within the underwriting platform. While at the same time, algorithmic trading, risk underwriting also seems to be areas which are more or less like credit underwriting in terms of its use with respect to artificial intelligence. But again, within the back office, like areas like smart contracts infrastructure is not something where there has been a lot of development. But what is extremely important to understand is, are these all artificial intelligence? So that's something we need to look at. So doing chatbots, does it actually resonate with artificial intelligence? Or doing your know your customer process, doing your process documentation, scanning all of your documentation, putting them in a file folder structure, do they actually constitute artificial intelligence? So what exactly are we doing there? And if they are artificial intelligence, how is intelligence actually coming in there? So let's try and delineate artificial intelligence within the scope of what we are seeing here in the next slide. In terms of understanding artificial intelligence, there are two ways you can approach it. What we saw in the previous slide in terms of know your customer is something what we would refer to as a rule-based workflow automation or as a process automation. So there is a lot of terms that are being loosely used within the scope of artificial intelligence or within the larger umbrella called artificial intelligence. But for example, terms like business process automation, robotic process automation, cognitive automation, artificial intelligence, data sciences, machine learning, all of these are considered as artificial intelligence. And when we talk about, or when we hear the term artificial intelligence, immediately we think that everything that is automated is artificial intelligence. That's not the case. So in order to understand artificial intelligence a little better, it's important to understand, or it's important to understand or look at some of the use cases and see whether they are actually artificial intelligence based use cases, or they process automation based ones. Because um, time savings, efficiency improvement, effort savings is something, and apparently cost savings is something that every organization wants today, not just financial institutions. That's the need of the hour for every CIO, and that's the need of the hour for every CIO or CEO. So most of the companies are investing their time, effort, and money into that. And as part of that, they're doing a lot of process-based automation. So for example, if I have somebody, if there is a human who is sitting over there looking at an underwriting document day in from morning to evening, and if they are scanning it and uploading it to a server, that process is being automated today using a set of robots, or what is being called as chatbots. These are basically back office process bots which repeatedly do a certain task, and this is more in terms of efficiently automating repeatable tasks within the realm of boundaries and desired outcomes that are known to us. So this is what is expected in this sheet. Let's go ahead and scan it. Let's do some optical character reading. Let's read this, put it, and then upload it to a server there, from where something will fetch it, like a task that repeatedly runs and makes it happen. So rule-based workflow automation, or a process automation, or building an iPhone in a factory in China somewhere in a batch process manner is not artificial intelligence. It has got more to do with automated. It has got more to do with automation or repeated process automation. So process automation should not be confused with artificial intelligence. On the other hand, if you are able to, like for example, a couple of years back, Google made a very remarkable claim. They said if you get 1 billion photographs, they would be able to say which one of them is a cat. And that's a very good example of artificial intelligence, because that's an area where you have the need for using technologies like a neural network or a deep learning network. Similarly, underwriting is an area within financial institutions where there is a potential for artificial intelligence to make changes, because if there is considerable level of data that is being built into an artificial intelligence based system, it is possible that the underwriting system, which is which is built using artificial intelligence, can actually say whether somebody is a good lender, whether somebody is a good candidate to issue a loan, whether somebody's loan needs to be approved, and things like that. So those are some good candidates, because they primarily rely on a lot of data, and based on the data they develop intelligence and then try to apply that intelligence onto anything new that comes in. And that's the same case with identifying somebody's voice from thousands of voice. For example, if a bank is trying to authenticate a client using their voice, then it can be highly regarded as a system that uses machine learning or any subset of artificial intelligence to do that, because it requires that kind of technology. But let us be very, very clear, and let us understand that process automation and artificial intelligence are not the same. So using a tool to do process automation in your company, using a set of bots or deploying a set of bots to address a set of backend processes is not artificial intelligence. There is no intelligence involved there. You basically make it as a workflow. You make a set of rules basically, and then you say what is the expected outcome, what is the actual outcome, compare it and make sure it is working fine. So that's very clearly defined, and the process happens based on how it is being defined. So that's not artificial intelligence. So it's very important to understand this, because when you go back and look at the previous slide, if you go back and look at the previous slide, when you talk about a chatbot as a more matured area within the scope of financial institutions today, what chatbots are doing today has got nothing to do with intelligence. What chatbots are doing today is very, very limited intelligence or very little intelligence. And similarly, when you look at a know your customer or an anti-money laundering, that has got nothing to do with intelligence per se. Yes, there is significant level of documentation that has been automated. Every day scans happen, every day optical character reading happens, but that has got nothing to do with intelligence. Similarly, if you look at anti-fraud and risk activities, Possible that somewhere somebody might have done some level of intelligence, but in general, there is a lot of process automation involved here. And that is the reason when I started this presentation, I wanted to start with the story on Tay, Zoe, and others actually, because if you go back and look at that right now, you can see that companies like Microsoft have tried to build artificial intelligence based chatterbots back in 2016, but did not understand the primary fundamentals that go into building that. They allowed those bots to interact with social media users within Twitter, Instagram, Facebook, and other areas. But then the more and more these chatterbots gained inputs from the social media users, they started to behave very weird actually. They started to provide inflammatory, inappropriate comments, and eventually Microsoft had to pull off Tay, and then they introduced Zoe. But even there again, after a 3-year period today, Zoe has been pulled back because they still think the technology is not ready yet, and there are challenges in using artificial intelligence in order to fuel a chatbot like Zoe. So one of the reasons why I wanted to start off with that example is because I wanted everyone to understand that there is a lot of work that you need to do from a preliminary standpoint in terms of a groundwork before you actually build your artificial intelligence system. If that is missing, it's not going to be successful. Your artificial intelligence is not going to help you, and it is important to understand whether you want to do process automation or you want to do artificial intelligence. If you're looking at process automation, then let's not call it artificial intelligence. It is business process automation or it is robotic process automation, no doubts about it. And of course, there are a bunch of software robots that come in and do a specific task, or they try and automate repetitive or mundane tasks, no doubt about it. But that has got nothing to do with intelligence. It's a set of rules that are being fed into the bot, and the bot accomplishes it based on what you have provided. If there is a difference there, it cannot identify it and make any changes, and that's where intelligence comes in. So with that being said, let's move on. So we are going to do a little bit of interactive session here. I know it's been almost close to 30 minutes, and I'm sure the users would also want to participate in this webinar. So to enable the users participate here, we are going to give some examples to help the attendees identify what they see here is actually artificial intelligence or anything else. Could be process automation or anything, but primarily the attendees here can look at this. For example, predictive analytics. It has an area where people can use data science, as it says. So we would like the attendees to say whether you think if this is artificial intelligence or not. Thank you. So once again, to help the attendees understand, we are raising a poll here. In this poll, we are asking you whether the area of functionality that you see, like predictive analytics, do you think if this is artificial intelligence? If you think so, please go ahead and say yes. If you think it's not, please say no. And same with customer onboarding, where I spoke about know your customer, where a lot of effort is done on automation, including process automation, and documentation and everything. So I request the users to I request the attendees to look at each one of this and answer with a yes or no. Yes if you think it's artificial intelligence, no if you think it's not. Can we move to the next one? There's a bit of time lag here. I hope attendees are able to see it. Is reporting artificial intelligence another area where there is a lot of money being spent today by financial institutions to know how their dashboards look, what kind of information they want to derive, how their business intelligence is going to provide them with insights and things like that. So again, is reporting an area of artificial intelligence? Do we need there? Do you need artificial intelligence for reporting purposes? Algorithmic trading, again an area where attendees are expected to say if you think it's artificial intelligence or not. I believe the reporting comes in after this, but I think the image came up earlier. Sorry about that. But yeah, we will have the last one to identify for the attendees would be reporting. So again, this is a poll that we wanted to take from you based on whether you think something is artificial intelligence or not. So you have predictive analytics, customer onboarding, underwriting, algorithmic trading, and reporting. So if users think some of these are artificial intelligence, please answer with a yes. And if you think it's not, please answer with a no. And once I would let the moderator decide once we are ready before we move to the next slide.
Yeah, Vasu, we are good to go.
Yeah, then can you please change the slide? At this juncture, I would now like to introduce the two guest speakers today. We have Mary Jackson, the CEO of Online Lenders Alliance, and we have Michael Day, the Policy Director. It's my pleasure to have them both here, and I would let Mary and Michael share some thoughts on emerging technologies and how they see the influence of technologies on the lending sector. Thank you, and Mary and Michael, it's yours.
Yes, thank you so much to the Zuci team for inviting us to join the webinar today. Anytime there's a new emerging technology or process that enters the marketplace, as you can imagine, Congress takes notice and sometimes become an investigative feature on Capitol Hill. But just to give you a little bit of background on who the Online Lender Alliance is, we're a trade association. We were the first trade association in the FinTech area. Our founders were the pioneers in the online lending industry. We've been in business for over 15 years and watched such huge developments on innovation and technologies in that time period. And it's a pleasure to be on the call today. Our board is representative of lenders, data bureaus, lead generators, service providers. We have companies like Elevate, Enova, Curo, publicly traded companies on our board, as well as smaller entities. And we have DataX and Microbilt on the board for our credit providers and other lenders and service providers. So if you get a chance to go to our website, which is the onlinelendersalliance.org, and you can see more about who we are. But what we do is we really try to help facilitate the understanding of the impact of technology on our lenders and how service providers drive innovation for our community. And we interact with Congress and state lawmakers on trying to figure out how these technologies have emerged and how we need to change regulations or laws to accommodate new technology. That's one of the challenges that we have is we follow 18 federal laws for our lending community. We also have issues before the FTC on lead generation and advertising. And on artificial intelligence, that has, caught the eye of Congress, like I said before, and Michael's going to talk about those issues here in a minute. But we also have the opportunity to educate members of Congress, the CFPB staff, the FTC on a variety of issues. We actually host a executive policy summit in May of every year to have those conversations where everybody comes to DC and helps us with those conversations. But we have ongoing efforts all the time with members and their staff, as well as the agencies, to try to inform them of how emerging technology assists the consumer at the end of the day, to make it easier for them to obtain a loan or try to understand some of the issues that they deal with on underwriting and making sure folks can become more credit worthy. We also have a gathering in September here at the end of the month in Dallas, Texas called Lend 360, and that's a huge networking opportunity where lenders and service providers get together to talk about how systems like Zuci can help their businesses and get the latest and greatest information on what is going on out there in the marketplace. And also, we are very focused on compliance. We make sure that our members comply not only with the laws, but we also have a set of best practices. And we monitor that very carefully and actually offer a compliance university program in July of every year. So folks can, again, share the latest compliance issues, what's been happening in the courts, how you need to really kind of pay attention so you don't become the next CFPB headline. And so there's a lot to do in this area. But as I mentioned, the artificial intelligence, they had a hearing in the Senate not too long ago, and the questioning coming from the senators was highly negative because they don't understand it. And so it's presentations like this that Zuci's putting on today that helps us understand more about how this is used. And in financial services, the real concern is, will these algorithms, will these artificial intelligence systems ultimately discriminate against a borrower or someone looking to borrow money? So with that said, I'm going to turn this over to Michael and have him talk about the specifics as to what we've seen on Capitol Hill. Michael, would you like to start?
Thanks, Mary. And certainly there's been a lot of kind of really, really good information here. And when we talk about policymakers, I'm going to look at it from a couple different perspectives. I'm going to look at, as Mary touched on a little bit, kind of the congressional approach and what we're seeing out of Congress, the regulators, and what we see kind of at the executive branch, and then kind of the states and how that evolves. So, I mean, broadly speaking, when we go to Capitol Hill or when we go over to an agency to talk with CFPB or Treasury or any of the other regulators, or we meet with the Trump administration, and we talk with them about AI, I think that oftentimes there's a little bit of a disconnect between the industry and some of those folks in terms of what AI means. While we went through maybe 17 or 18 very, very different instances of AI, it almost kind of reminded me that if you ever talk to an Eskimo or heard them talk, they have 25 different words for snow. I mean, in AI, we have so many different types of technologies that are being applied, but for policymakers, it's much more kind of in a couple buckets. And I would say the first is kind of machine learning, and then the other would be natural language processing. So, a lot of times these issues with AI a little bit get conflated with big data, but really if you kind of drill down into it with some of these folks, it usually goes into a bucket of either being machine learning or natural language processing. And as Mary mentioned, both in terms of Congress, regulators, the administration, and at the state level, much of what's taking place right now is kind of a desire to understand. Certainly there's an interest there. There's a lot of potential that folks see in AI, but I think with that potential, comes some concerns. And a couple of the bigger areas that folks at the federal, state, regulators, administration, Congress are looking at are things like, fair lending and Equal Credit Opportunity Act concerns. So, I mean, as we see financial sector increase the use of AI, whether it's in marketing or underwriting or account management, and that decision making is moving away from being controlled by a real person, the potential for discrimination comes up. And I think it's important to note here that when I've had conversations with folks in kind of the alternative data and the artificial intelligence industry, I think from their perspective that they feel like these technologies are race neutral, that they don't touch on protected classes, and that very well may be true. But for a congressional committee or a regulator or someone at Treasury, what's going to be key in those discussions is being able to explain the application and being able to actually show how it doesn't result in inadvertent discrimination. I think that's where the challenge in this area for the industry has been, is to really kind of be able to show in a very linear progression how the application guards against any type of discrimination. One of the other big areas that I think policymakers at all levels are concerned about is, as the use of AI grows, there's this gray area about when information is being furnished, at what point do you cross a line and then information becomes a credit report? And the reason why that's critical is that as soon as something is considered a credit report, that triggers Fair Credit Reporting Act requirements. And, the FCRA requirements, they're broad, meaning that a firm that provides information, even if it's used in determining credit eligibility, may inadvertently be subject to FCRA. And some of the conversations that I've had with folks on this is, at least here at OLA, the way we have been kind of discerning the difference is, it's great to provide input and insights into a credit decision that results in a positive outcome for the consumer. So in terms of helping get the lender to yes, those have a lower threshold. But as soon as any of the information or insights that you're providing play a factor in a decline of the consumer, that's really where you're absolutely kind of crossing into that FCRA area. So you need to be very, very careful as you're developing in the conversations you're having with your partners in terms of how the information is going to be used. So I think you can kind of see from these two examples where broadly policymakers are at, and certainly some of our international counterparts are much further along in establishing roles and structures to govern AI. I mean, we've seen the GDPR standards that have been established and kind of where those are going, and we really don't have anything here in the United States that kind of mirrors that. I know California and some states have talked about it, but just because there's not that structure in place yet, that doesn't mean there's not just as much going on. I'm going to look at kind of three different entities, as I mentioned: Congress, regulators, and then the state. So in Congress, very much, I think right now, what's being at hand is this idea of kind of learning and exploring. And I think one of the more significant and noteworthy kind of steps to show, at least from a legislator perspective, the interest in AI was the Financial Services Committee that had a new chair this year. One of the first things that she did was establish a task force on artificial intelligence to work on the issue. Now, just a couple things here to get a little bit into the kind of the weeds here on Congress. So as a task force, this intelligence task force has the ability to call hearings. They can take testimony and they can issue reports. So it's very much fact-finding. They don't have the ability to author legislation or approve legislation. So while they have open hearings and open meetings, their ability to kind of move the ball forward on policy is going to be limited. The task force is going to be headed by a gentleman named Bill Foster. He's from Illinois. I think kind of one of the noteworthy items on him is, unlike many of his colleagues, he's a physicist. He has a background. He worked at Fermilab, specializing in particle acceleration. So he really approaches the AI issue from a science perspective, which I think is going to be very helpful for the industry. In terms of his agenda and what he's outlined, is he's going to look at AI from, a machine learning perspective, risk management, digital identification, how it combats fraud. And I think one of the larger issues that the industry at least needs to think through, and I think will be one of the topics and one of the items we'll touch on at Lens 360, is kind of what the automation that comes from machine learning and artificial intelligence, what that's going to have on the impact of jobs in the financial services sector, what new jobs it's going to create, what jobs it may make obsolete. So I think right now Congress is very much taking a wait-and-see approach. I think there's going to be a hearing this fall in the AI task force, and they're going to specifically look at jobs in the financial services sector and the impact artificial intelligence is having on it. So that's kind of congressional perspective. From the regulators' perspective, I think it's important to know, regulators, particularly the Fed, FDIC, and some of these other items, oftentimes they extend beyond maybe a congressional term or even a term within an administration. They're much more focused on some of the details. They're much more kind of sequential. They don't move as quickly as maybe a legislature might move, but they are looking at a couple areas, and in particular, I think the first is kind of this idea of AI either inadvertently or as a tool for unfair, deceptive, or abusive practices, as CFPB looks at it, or just unfair, deceptive acts through the FTC. I'll just give you an example of kind of where we've seen this type of standards look at abusive practices come up is the use and the rise of AI and behavioral scoring. The concerns that have come out is that, as the AI systems become more prevalent, do we need broader disclosure so that when a person is getting a product where behavioral scoring is involved, is that an area where in the disclosure the consumer needs to be made aware of that? It's certainly an issue that regulators are debating. They haven't come down on one side or another, but it's those types of questions that they're dealing with right now. The other that I would just point out is kind of more safety and soundness. And I know at times that can be kind of a catch-all phrase from people, but when a bank uses AI, regulators are looking at the effect of these processes have on risk as it relates to safety and soundness. A couple different things. The Federal Reserve Board put out a supervisory letter, and they pointed out the need for strong analytics and full development and implementation of models. So making sure that everything is fully stress tested before going forward. I think recently the chair of the FDIC, Jenna McWilliams, she's called for guidance on how banks use AI in terms of housing. There was recently, Facebook was found in violation of fair housing for using machine learning in ways that excluded and created the potential for discriminatory practices. So regulators are looking at these areas. GAO, which is kind of the investigative arm of Congress and is also used by agencies, in a report that they issued last year, raised concerns about AI and underwriting, especially in terms of it not being tested during a downturn. So I think some of it is just they need more data to be able to determine what the impacts are going to be. Not all of it's negative. I think one of the more positive things that I would point to is just recently, I think within a month or so, CFPB, in a comment on one of their no action applicants, no action letters are a tool used by regulators, primarily CFPB, the SEC, the CFTC, the OCC, and what they do within a very, very structured and confined environment, give a company a safe harbor from prosecution and additional regulatory scrutiny to be able to operate a new application and test it out, and then provide the regulator on regularly reported opportunities more data about how it impacts the market as a way to kind of develop almost like, I think people talk about sandbox or laboratory concepts in a much safer environment. CFPB has issued one and only one of these no action letters to a company called Upstart Network, and they had very, very positive comments about the work by Upstart Network, their application to address consumer risk, and the use of alternative algorithms. So I think that regulators are starting to get more comfortable, and they're seeing the process going forward. Kind of the last level I'll touch on real quickly is at the state level. And states, in some ways, are going to kind of be split into two areas. You're going to have your state banking regulators, and you're going to have your attorney generals. The state banking regulators are very much, their kind of thought process is going to mirror what you're seeing through some of the federal regulators in terms of what CFPB is doing, what the Federal Reserve is doing, what the FDIC and the OCC are doing, in terms of looking at how AI and some of these alternative systems are working, and the primary vehicle of that has been the Conference of State Banking Regulators to their Vision 2020, where they've outlined some strategies and some structure for how AI should proceed. Kind of the other side of the coin that I think is a little bit more unique and that the states bring this is the attorney generals. Now, attorney generals obviously are primary enforcement offices, and they're going to be looking at AI in terms of more of the consumer-facing applications. Their concerns are going to be more inadvertently, is AI being used to defraud customers? Is it creating some of these similar discriminatory practices that we talked about earlier? And attorney generals are just now starting through some of their state IG organizations to look at AI. So you should really kind of keep an eye on that, and I think you're going to see more on the AG front coming forward. Kind of in closing, what I would leave you all as kind of the AI front moves ahead is to kind of look at some of these other cutting edge and maybe a sister organization, and that being kind of the credit bureaus. Maybe a year and a half ago, credit bureaus were seen as kind of the solution to provide access to capital and credit to more individuals, how it was going to increase consumers' options to banking services. And, that was really the front they were going on until we saw what happened with Equifax. And the reason why I mention that is I think there's a lot of promise with AI right now. There's a lot of potential. And it's very, very important as an industry that you manage, and it's one of the things that we at OLA try to help our members do, how you proceed, because it only takes kind of one Equifax in an industry to change kind of some of that positive and some of the interesting areas that policymakers are looking at, and having them kind of take a step back and be much more prescriptive in terms of how they're going to kind of allow the industry to proceed. And I think that why that's impactful is on the ability of the industry to evolve and innovate if there are those kind of additional regulatory items, and those come when you have maybe a misstep. So I think as an industry as a whole, it kind of behooves us to kind of work together and make sure we're checking those boxes as we move forward. So appreciate the time. It's a lot of what we do at OLA. Certainly, if you're interested, follow up with Mary or I, and we can certainly help you with that.
Thank you, Michael. Thank you so much. I completely echo Mary and Michael's thoughts, and Zuci is also part of the LEN 360 event in Dallas this month. I actually wanted to end this webinar by talking a little bit about building the building steps towards artificial intelligence. But interestingly, one of the attendees had raised a question, and before I thought I'll take it as part of the question and answer, towards the end. But this is very interesting. So somebody has mentioned in the chat window for the question that we are discussing about AI at a very superficial level, and there's a lot of disruption that is happening across all industries, and we are not taking specific examples. There is no denial that there is some level of change that is happening. Nobody is denying that. Yes, there is a lot of things that are being looked upon. So Stanley Kubrick took this movie 2001, A Space Odyssey, in 1968, and he said by 2001 there will be a lot of artificial intelligence people here. But unfortunately, 2001 did not. And that's the point we are getting to, which is there is a lot of things that can happen. So it doesn't mean that between 1968 and 2001 there was no technology innovation, but the kind of projection that Stanley Kubrick did in the movie versus what we had in 2001 was very different. There were technological advances, there were mobile phones and things like that, but it was not really like robots were moving on Earth. So that's the same point that we are coming to when I'm trying to answer this question. There is definitely advancement. There is definitely artificial intelligence improvements that are happening. Not questioned at all. But the point is, in order to make artificial intelligence successful, what is that you will need? Because artificial intelligence cannot happen overnight. And that's what I wanted to sign off as we wanted to finish this webinar. And this slide that we are going to talk about is about the data first approach to artificial intelligence. Because when we talk about artificial intelligence in general, we think of a robot that is walking somewhere and we say, yeah, here is artificial intelligence. Well, that's not it is actually. Even if it's a robot, it requires a lot of data in order to be successful. So what it means in order to build a very solid artificial intelligence system is we need to look at it like the needs of hierarchy by Maslow. So somebody published this and it was very interesting that I thought I will refer this actually. See, as we get started with artificial intelligence, there are a set of things that we do from the bottom of the pyramid. First thing, we need to collect data, whether it is a user-facing application or a sensor or anything for that matter. What kind of data does the system actually give us? So data collection stands at the bottom of the pyramid, and then it goes to data flow, which is where we look at building a reliable data flow, building your extraction, transformation, and loading pipeline, building your infrastructure in order to enable the data to flow and things like that. And then your structured versus unstructured data storage and all of that. So once you cross the data flow, that's when you come into the exploration / transformation part, where data cleaning, which is a very undermined activity within data sciences, or an activity that is being spoken about very little, data cleaning. That's a very important part. So the pyramid at that level is more in terms of getting integrity, getting data with integrity, cleaning it up, doing anomaly detection, preparation, and things like that. And then you go into training data, which is aggregation or labeling it. At that point of time, what happens is we know what kind of predictions or churns we are expecting within the system, and then we are trying to create training data for that. You can consider this part, which is the aggregate / label part, more in terms of business intelligence. That is where you try to collect your analytics, your metrics, you try to look at your customer segments, you do your aggregation, feature engineering, and things like that. And each of this happens in a step basically. And at that stage, you can create your training data. Now there again, there are two parts to it. If your application is user facing, then you need to do A/B testing, experimentation to be deployed and things like that, and start off with a simple machine learning algorithm like a linear regression or a division basically, before you actually take artificial intelligence full scale. So the idea was to basically say that there is a lot of data based effort that needs to happen at the bottom of the pyramid before actual artificial intelligence or deep learning can take place. That is why a Facebook or an Amazon or an Apple are successful today, because the data sets that they built over the years is helping them to do artificial intelligence. On the other hand, the reason why we wanted to do this webinar, Common Misconceptions for Financial Institutions, is people think that results can be derived overnight. It doesn't happen like that. If you don't have 10 to 12 years of data, building an artificial intelligence is not going to be possible at all. With last 1 year of customer data, a credit union cannot do it. Or let's say a fintech firm with just 3 years in business cannot predict or personalize or create loyalty programs without subsequent level of data. And that is what we wanted to actually capture as part of this webinar. And thanks for asking that question. I hope I answered it. If not, please reach out to us if you have any specific questions. We'll be happy to take them. There are a couple of more questions. We have 3 minutes before we wind up, but let me just take this. So one of the questions that came up is, are then TensorFlow, Amazon machine learning APIs not helpful? Why are companies like Google and Amazon creating machine learning APIs? No, absolutely. They are very, very useful. They are awesome, actually. In fact, as we are looking at this pyramid, a lot of companies are helping to create this pyramid for you. That's what Amazon is doing, I believe. But there is a lot of things that are happening otherwise also. Without clean data, people feed data into Amazon machine learning. They don't even have clean data. And in the process, when Amazon constructs and builds you or gives you something that may not be very useful to you, you will get a machine learning based output. Now, what do you do with that is the question. So there is no second thought that TensorFlow and Amazon machine learning APIs are exceptional and they are awesome. No second thoughts on that. But the thing is, how much do you make use of them will depend on what kind of data you give them. And that means you need to be having significant data and valid data that can help you to use these APIs and get outcomes. So that's one question. And I also see that there is one more question on whether robotic process automation is not artificial intelligence. I think I answered that earlier. It's process automation. It can result in a lot of time and effort savings, but there is no intelligence involved there. So I believe that's truly not artificial intelligence. So that's what I would like to answer. So in my opinion, self-actualization of artificial intelligence, which is the top of the pyramid, is great. But we first need food, water, and shelter. And that is where data literacy, data collection, and infrastructure matters. So I think in order to build a very solid artificial intelligence system, we need to get the fundamentals right. And that was the whole idea behind this webinar. I thank all the attendees for attending this webinar today. And if there are any questions, please write to us. We will take it up. I would also like to thank Mary and Michael for their valuable time today. Thank you so much.
Thank you all for attending this webinar. So the webinar ends here. Thank you so much. You will get a follow-up mail for the video. Thank you.
Thanks.